Friends, this is our third video on income tax digest, and we start with the data which was released by the CBDT last week, wherein it was held by the Ministry of Finance that in 2014-15, in case any taxpayer has a total income of 7 lakh rupees, he had to pay income tax of around 25-26,000 at that point of time after the deductions. The present value of that 25-26,000 today is around 43 to 44,000 rupees, and as of now on the same 7 lakh rupees of total income there is nil rate of tax under the new regime. However, it is our position and our legal submission that the present value of that 7 lakh rupees of total income is around 12.5 lakh rupees also, considering an inflation of 6%, and the tax on 12.5 lakh rupees under the new regime is around 90,000 rupees. Therefore, it is our suggestion, the first suggestion in this video, that the old regime be scrapped as is the roadmap of the government in the coming budget. However, the new regime tax slabs have to be further rationalized for adjusting it with inflation at least at the rate of 6% per annum. Second suggestion for the Income Tax Act revamp is today there are multifarious dates under income tax: TDS payment date, TDS return date, income tax return date, different dates for different taxpayers, tax audit date, different date for different taxpayers, foreign tax audit or transfer pricing audit date which is different from the other tax audit dates. So many multiplicity of dates makes it confusing, and sometimes certain taxpayers they also miss the dates. So as the Income Tax Act is comprehensively reviewed in the upcoming budget, it is our suggestion to also have consistent date for all the taxpayers and have fewer dates than what is today. Now, a very important expenditure for almost all the businesses today is the bank foreclosure charges. What is bank foreclosure charges? It is the charges which is paid by a borrower for shifting his loan from one bank to the other. The question is whether this bank foreclosure charges is eligible as a deduction in income tax or not. It was held in the case of EIH Associated Hotels by the Honorable Madras High Court that such bank foreclosure charges is commercially and business wise expedient, and it indirectly reflects a present value of the huge interest which may be paid by the borrower, and therefore it is allowable as a deduction under section 37 General Deduction of the Income Tax Act. All of us who get orders, quantum orders, also most of the time get a penalty order. Now under section 275(1)(c), the last date of issuing a penalty order is within 6 months of the date of initiation of the penalty proceedings. The question is, what is the date of the initiation of the penalty proceedings? It was held by the Honorable Delhi High Court in the case of Turner General Entertainment Networks that the date of initiation would be considered as the date when the first initiation of the penalty proceedings had taken place. For example, in a TDS case, the TDS AO has initiated penalty proceedings in say September 23 and referred it to JCIT of the range, but the JCIT has passed the order and the show cause in say October, November 2024. In such case, such penalty orders would be considered as time barred, since the last date under 275(1)(c) for passing the penalty order was 31st of March 2024. Well, in case of search, survey, seizures of cash, the tax liability arises under section 115 BBE by invoking section 69A on unexplained monies. Many of the times the taxpayers try to disclose this unexplained money in their return of income and pay a tax of 30% instead of 60% by disclosing it as income from other sources. Well, two important considerations have been laid down by the Honorable ITAT Hyderabad in the case of Sri Venkata Krishna for identifying in case such unexplained money can be disclosed as income from other sources. First and most important is that the payers to the assessee of such unexplained money, they should be identifiable, and second, there should be sufficient, strong, contemporaneous documentary evidence for identifying such payers of unexplained money to the instant assessees. In foreign taxation, we had discussed in our last video that sale of software by a foreign country is to be taxed in the country of residence, as was held in the case of Engineering Analysis Center of Excellence by the Honorable Apex Court. Now, the question is that in case the income tax authorities in India question the tax residency certificate of the foreign country, then can such amounts be taxable in India? It was held in the case of Tricentis GmbH by the Honorable ITAT Delhi that TRCs cannot be questioned and companies cannot be considered as conduit entities only in case of a doubt. There has to be contemporaneous, strong documentary evidence to prove such conduit entities. Therefore, tax residency certificates shall not be normally doubted by the Indian income tax authorities. Another issue in foreign taxation is in case there are different interpretations of the DTAA between the Indian income tax authorities and foreign income tax authorities. It is a case that as per Article 12 of the Indian-Japan DTAA, in case professional services are rendered, then the taxing country would be the country of residence. However, the Japan tax authorities have interpreted Article 12 sub-article 4 in a way that only in case individual professionals are concerned, then only the taxability would be in the country of residence. Other than that, the taxability would be in the country of source, and therefore they withheld tax of AZB and partners. However, it was held by the ITAT Mumbai that in case a foreign jurisdiction interprets law in a different way from Indian income tax authorities, which is the country of residence in this case, where a firm of professionals have rendered professional services outside India, then the Indian income tax authorities are bound to give the credit of such taxes paid outside India. So friends, these are the important developments in income tax in the bygone week. Thank you for watching. Do stay tuned. Do like, share and subscribe to this channel. Thank you very much.